Let's take a deeper dive in this break-even analysis. We're going to use percentages as well as dollar amounts to do some calculations. And this is again the kind of the back of the napkin analysis that you will be able to use and find hopefully pretty handy in designing. So you recall that we had our CVP income statement. And when we did that, we took a look and said, okay, I got my selling price of 10, got my variable cost of 5, and I have my contribution margin of 5. My variable cost minus my selling price minus my variable cost. If we look at percentages, we can look and say, oh, well, our selling price is 100%. Our variable costs here happen to be 50%. And our contribution margin had to be 50%. We've got some easy numbers to work with. So if we look at this, we said we had our fixed cost of 10,000. We were able to do fixed cost minus divided by contribution margin dollars to give us units. We also can do fixed cost divided by contribution margin percentage, which if you do dollars divided by a percent, we're still going to have with dollars. So let's do that here. Let's take a look and we'll explore and try to see what we come up with for our percentage and for our units. So here we had our fixed cost divided 10,000 divided by $5 per unit. Ended up with 2,000 units. Let's try that with a contribution margin percentage. If we divide $10,000 divided by 50%, or 0.5, we're going to end up with a dollar amount of 20,000. You say 2,000 units, 20,000. Well, if we go back and check, our selling price is $10 a unit. Do 2,000 times $10 per unit. You better get that same $20,000. Frankly, we tend to use the percentage even more than we do the individual dollar amounts, because usually you have multiple products that are being sold. And we talked about product mixes, and if we have 2 or 3 or 4 different kinds of units, we got to account for that. So if we have an overall contribution margin percentage, we can calculate an overall break even based on the total dollars we need. And then we can divide that dollars by the percentage of sales for each category and the multiple units that we use. But again, I wanted to give you a big picture, an overview. And when I told you I did a back of the napkin 5 or 10 minute analysis of this company to see where they got to break even, this is exactly what I did. And I used the percentage method to do that and was very quickly able to come up with a total dollars in sales they need to break even. And you can do this too. So hopefully that gives you a little bit of additional insight and a little bit of reinforcement to the power of what we're doing here.